General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Lord knows it's hot outside. All right, let me go over. Matter of fact, I didn't do Friday last week. Friday be hard to do. I'm not forecasting on Friday. It's just like, did I hit my target from Thursday? I don't think I did, but didn't do this. Let's do this because this is important. Options expiry week this week. Sentiment. Bullish sentiment is kind of coming up. Bearish is still in control. Let's do this. Let's put this. Boom. All right, cool. Let's do this. Let's get the breakdown from here. Things like non-commercials increasing shorts more than longs, possibly a bearish tilt. Commercials likely boosting net long exposure, which can be a contrarian bullish signature. Sizable increase in total interest, indicating growth in market participation. Let me see a deeper interpretation using Larry Williams framework. Let's dig deep into it. Net position spreads, bearish bias increasing. The short position increased more aggressively than net longs. Net short speculative position has contained contrarian bullish signals, especially if they are near extremes. The rise in spirit also hits a hedge in the range expectation than directional shoots. That's even higher. Net positive is strong criterion buy signal. Large spike in open interest also confirms that new money is entering, not just short covering and position square. Slightly short bias. Okay. The setup is leaning bullish for VIX. Nah, I don't need a whole chart. Let me edit this and get this part. Then let me add this to this. Boom. Waller. We got Powell on Wednesday at 1:30 p.m. I think that's gonna be the big dog. Everything else is kind of not big dog. I'm not interested here. I think the rate cuts will be in June. June, yeah. Cuts definitely here. Maybe a 50 basis points cut. Earnings, Tesla next week. So I think week one. Let's go here. Forex Factory. The news been losing left and right. Is this NFP? Yeah. So week one. Of next month is going to be big. Microsoft and Meta and Apple. And NFP. This week is going to be Netflix and on Thursday. Netflix is number 8 in the NASDAQ on Thursday. That's market close. Dollar retracement and selling retracements. Dollar still bearish. Sell the retracements. Let's throw this in here too. Let's see. Let me see it. I just want to read it. See some good notes on it. Non-commercials longs went down, shorts went down, spreads went down. Reduced long. Speculators reduced long positions significantly, a potential sign of waning bullish conviction. They are still net long, which isn't yet contrarian buy or sell signal. It's not extreme. Closed some shorts and added some longs, a clear shift towards neutrality or possibility early accumulation. Net short, reduced some bearish exposure could be interpreted as first cue of longer term USD bottom prices. The OIF, damn, yeah, 22,770, a sharp drop. Liquidation across the board, not aggressive. New money. Last wave of trend followers are exiting, a potential precursor to reversal. Non-reportables. Small traders added to long slightly, but overall they still net short. Not a major drop, but marginally bullish from a contrarian view. Let's add this. Okay. Let's do this like this. Because I like the logos and all that stuff. Okay. Then copy this. Go. There we go. Let's do NASDAQ. So you can trade futures on the soft to the refinancing rate. That's interesting. Let's grab this. All the volume is in commercials going short. Non-commercials alone, the non-reportables alone, but commercials are short, and they got the most open interest, so they driving this market. Why are they pulling? It makes sense for hedge funds to dollar cost average into the longs, though. Like, that does make sense. We got what? This week and next week for China to make a deal. So it's like long-term option contracts that make sense. Commercials are short. It's options expiry week. When they close out them shorts, we'll buy up. That makes sense as well. I'm long for the week as well, but I'm not in yet. Well, I'm options, yeah, but non-commercials, longs went down, shorts went way down. They probably cashed out. They're still net long, likely reduced exposure. The drop in shorts is notable. Renewed optimism or a loss of hedging urgency. Uptick in spreads point to range trading or hedging, not directional bets. Trend follows are still bullish, not an extreme, but shaking either. Neutral to bearish contrarian signal. Commercials, increased longs and increased shorts. Heavily net short. Yeah, classic warning flag. Both sides increased. The net bearish persists and has grown slightly. They're selling the rally. Open interest increase. Rose suggested new positions were open, not rolling over a liquidation. New money betting long, aligning with commercials may be fading. Non-reportables still bullish but weakening. Contrarian buy signal, but they're still net long, so it's not yet extreme when you jump on. Non-commercial still bullish, mildly bearish. Commercials bearish, open interest rising. Non-reportables mildly bullish. Smart money is selling in the strength. Speculators are holding. Bullish bets and open interest confirms a crowded trade. We are closer to the top than the bottom. Commercials selling the trap. That is interesting. It is options expiry week too. Okay. Monthly. It's bearish order flow at the monthly, but we're not closing in that range. We got 2 weeks left. There's nothing to put on the monthly. Weekly, I do want to see previous week high traded to, and then I'll see how price acts around that level. Daily, we do got this old gap down here, this weekly gap we can target if we have CSD at this previous week's high. Until then, I'm not impressed by this daily chart. There is no daily fair value gap. We haven't retested any bullish levels to confirm any conviction to go higher. We're not creating any fair value gaps. All the bearish fair value gaps got filled with this one candle. It looks bullish, but it looks like a trap as well. Like we come down, test this order block, and then push, okay. Or create a fair value gap, respect that level, okay. But until then, this is just a really large range. We can bounce in or consolidate in the middle. It's really not that big of news to Thursday, Netflix, and Power Talk Wednesday. H4 chart, kind of respecting this inversion fair value gap, but that gives me conviction just to get up the previous week's high. Retracements, like say we sweep this low, I still would target this week high because just buy stops are there. We push up, respect anything here, because I believe there's another. I was looking at Costco. Here, we got like 3 weeks of consolidation here. Just 25.36. We can sell from there. This line in the sand, we're still under it. I kind of keep my eye on that, but higher prices will be short term. I don't know about the commercial selling. I do know it's options expiry week, so usually we get daily level smacked, really, really big moves. I know they have a deal with India for like electronics and stuff, for smartphones and stuff that we need. So that'll actually help. This level here never got tapped, which was, I think it was monthly. Yeah, failure swing on the monthly. We're really far from it though. I'm not studying it too much. Previous week's highs first for me. Previous week's high. I would love to get for price to get here and then target previous week's high. That'll be my trade idea. If not, and it just gaps up and we're at previous week's high already, or hitting that buy side liquidity I just looked at, this low would be a good target to re-enter longs. So if this, well, basically if this, then that, and if that, then this. That's how I'm kind of looking at it coming forward. Let me export this. And then I'll add that to the Telegram journal. All right, that's that on that. Y'all have a good day. Peace.